What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on BABA stock.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on a price chart and how we get there. Then we'll continue with the fundamental news, and I have to say that we have several not the best news, to be honest. And at the end of this video, I will share my thoughts and my technical analysis, and I will show you what should we expect next. So let's start with the price chart. I made my previous video right here at this point when we had the first breakout below this range of support at roughly $88.04, and I've told you that because of this breakout we almost hit the 0.236 Fibonacci retracement level. It is the Fibonacci retracement level if I pull this tool from its lowest point to its swing high, because we completed all 5 waves in it. And because of this, my main assumption was that probably we should break this range and land at the ranges from 0.32 through 0.5 to probably the golden pocket range. And right now we are still at this level of support, and it is the confluence with this previous stop of the third wave. And in my technical analysis I will show you what should we expect next in upcoming week, but for now let's continue with the fundamental news. So first of all, let me show you this article that was published on December 19th, and it's titled "From Recovery to Regulation: How China Tech Giants Could Fare in 2023 After a Bruising Year." And the key points are following. It has been a rough year for China tech. Billions have been wiped off the value of the country's giants, including Alibaba and Tencent, and companies have posted their slowest growth rates on record. Investors are trading with caution into next year in regards to Chinese tech stocks, with analysts broadly expecting regulation to be more predictable and growth to accelerate. But uncertainty around China's economic outlook and how it will exit its zero-COVID policy is creating risks. And I have to say that right now we have very bad news from the COVID-19 policy. And let me show you this article. We are on South China Morning Post, and this article was published on December 23rd. And it's titled "Hong Kong Stocks Drop to Trim Weekly Gain as Surging COVID-19 Cases Cut China's Growth Outlook." Tech majors JD.com, NetEase and Alibaba went on the Hang Seng Tech Index. Resilient US economic data stoked fears that the Federal Reserve will continue to raise interest rate to curb inflation. And let me quote you this. China's biggest cities, including Beijing and Shanghai, are seeing massive spikes in COVID-19 cases since the nation abruptly ended its pandemic restrictions. Subway passenger numbers in Beijing are about 80% below the same period in 2019, while subway riders in Shanghai have almost halved, according to local media. Shandong and Yangzhou provinces have sent about 500 doctors to the capital city to help ease the strain on the medical system, as hospitals are overrun by patients. Sentiment was also cautious as strong US economic data reignited fears that the Federal Reserve will continue to raise borrowing costs to cool inflation. Initial jobless climb were less than expected for the week ended December 17. And definitely, these are major bearish news that might drive the price of BABA lower in a short period of time. And if you take a look on the daily cases of COVID-19 in China, we are on worldometers.info, and right here we cannot see the major spike. But according to this article, we are on CNN.com, and this article was published just 2 days ago, and it's titled "Leaked Notes from Chinese Health Officials Estimate 250 million COVID-19 infections in December." And let me quote you this. Almost 250 million people in China may have caught COVID-19 in the first 20 days of December, according to an internal estimate from the nation's top health officials, Bloomberg News and Financial Times reported Friday. If correct, the estimate, which CNN cannot independently confirm, would account for roughly 18% of China's 1.4 billion people and represent the largest COVID-19 outbreak to date globally. And definitely, this is the major fear that is on the table right now, that might drive not only Chinese stocks lower, but also the entire stock market to the lower ranges. And that is why we have to be very cautious, and definitely on worldometers.info we cannot have the latest information, because China is a quite closed country in terms of the information, and that's why we have to be very cautious. So in general, let me show you that according to the list of institutional investors, as you can see, we have several latest NP filings, and the total sentiment might be quite positive, because we have several new companies that opened their new position, but these positions are quite small. As you can see, $111,000, $285,000, and we also have a bunch of companies that reduced their positions in BABA. That's why we don't have a clear picture from this list. But if you want to know pros and cons on the BABA stock, let me show you this article. We are on motleyfool.com, and this article was published on December 20th, and it says: "Through reasons to buy Alibaba stock and through reasons to sell." And the key points are following. Alibaba stock is now down more than 70% from its all-time high. Warmer relations between the US and China, among the easing of other recent challenges, could bring back the bulls. However, restrictions on chip exports and several other issues suggest it's still too early to buy this battered stock. So definitely we have to be cautious with our position, because we don't have a major catalyst that will overtake all other negative catalysts, and because of this let's continue with the technical analysis. But before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So from the technical standpoint, we also have some bearish signs, because if I connect these tops like this, and if I connect these bottoms, as you can see, this pattern is the descending triangle, and usually this triangle breaks to the downside. And on my previous video I've told you that most likely we should land somewhere at these ranges from $80.51 to $78.18, and even to the golden pocket range, the range in between $70.67 and $71.85. And if it happens, definitely we might see the trend reversal only at the beginning of next year, and we basically have just several days until the year end, and I think not so many people want to trade or buy any stocks at this period, and that's why most likely we will see the breakout below this range. So technically, definitely this asset is very lucrative in the long-term perspective, but the short-term perspective is not so bullish on this stock. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up on the attack. Baby, I'm bad. I just